Hey guys, I'm Igor. A lot of people have been asking me for a while, Igor, why in your daily videos you constantly talk about all these expensive stocks that cost like gazillion dollars? Give us some stocks which cost under 10 bucks, but at the same time have a huge potential. Other people have been asking me to give them some good high-yield dividend stocks to buy. So I've decided to do a video in which I talk about 3 stocks under $10, 2 of them with potential to gain 40 to 70% in not so distant future, and 1 high dividend stock under $10 which yields, are you ready for this? It yields 10.3%. And if you like this video, give me some thumbs up, subscribe to my channel and write me some comments. I'm always eager to hear from you. Let's start. First stock is Digital Turbine, stock symbol APPS. The business concept behind this company is absolutely brilliant. Imagine you're playing a game such as Candy Crush. You're playing, you're all into it, and at one point King, which is a publisher for Candy Crush, wants to push another game on you. So they show you a banner advertisement within that game. But if you click on it, you will be redirected out of your game into some download place where you will have a choice to download this new game. That's pretty annoying to say the least. But that's where the brilliant concept developed by Digital Turbine called Single Tap comes into play. After clicking on that ad by King, instead of being redirected to another place, the new app starts to install behind the scenes. Obviously, King has to pay Digital Turbine to have that functionality. Awesome! But Digital Turbine's main product, called Ignite, is even cooler. After the user receives and opens his or her new phone, Ignite suggests to the user which applications to install based on the model of the phone, user location, preferences, and whatnot. Digital Turbines went with this product to original equipment manufacturers and mobile operators such as Samsung, Verizon, LG, and said, how about we embed our software into your operating system, and in return, we'll give you a portion of the revenue generated by our app. How is that revenue generated? App developers and advertisers who want their software to appear in a list of suggested apps to install into brand new phones would pay for this to Digital Turbines, and Digital Turbines would share a portion of it with phone manufacturers. If I'm Verizon or Samsung, why wouldn't I want that? All I have to do is to embed the software into my operating system and start minting money. And that's what they did. These guys are making money with every Android phone sold with their software in it. And management constantly emphasizes on their conference calls that they are not satisfied with just 30% plus growth. They want more. That's exactly what a shareholder wants to hear. But what really has gotten my juices going is their recent acquisition of the company called MobilePasse. This company operates as a mobile phone advertising platform, and it fits Digital Turbine like a glove. And listen to this, guys, you're going to really love this. MobilePasse has generated $55 million in recurring revenue in 2019. Recurring revenue. That's not the revenue they earn and forget about it. This is the revenue they will get year over year and over year. And the more providers they sign up with them, the more phones use their software, the more that recurring revenue they will get. And this recurring revenue is added to Digital Turbine's earnings almost immediately. Not to mention that now Digital Turbine can take MobilePasse internationally, and they can cross-sell each other's products. And here comes the best part, guys. They only paid $66 million for this jewel. Sounds like a sweet deal to me. So Digital Turbine stock, symbol APPS, is trading at $6.80 as of this video. But if they continue to execute as I think they can, as a long-term investment, I think it could be worth about $11 to $12 in not so distant future. That's like 60 to 70% from current levels. That's awesome. Next stock is, do you recognize this, guys? That's right, it's Zynga Games. And of course, the company and the stock I want to talk to you about is Zynga. stock symbol ZNGA. Zynga is a developer of very popular social games that are played around the world, such as Words with Friends, Empires and Puzzles, and Merge Dragon, and so on. Last year, Zynga's shares rallied 70%. What? That's right, 70%. And what's even more crazy is that, in my opinion, shares still have room to run. Last quarter, the company set its all-time revenue record, with revenue growing up 63% year over year, and bookings were up 62% year over year. Here's the quote from the company's last conference call. Looking at the full year in 2019, we delivered a record top-line performance with revenue of $1.3 billion, up 46% year over year. Wow! Let me tell you guys, these are not ordinary numbers. If you think that every other company show numbers such as this, you will be in for a big surprise. Huge! Anyway, 46% full year over year increase is excellent, even for some crazy biotech company. But when a gaming company starts to deliver numbers like this, a lot of institutional investors and big money managers start to take notice. And if those guys start to buying, you want to be with them, because that's how you end up on the right side of the trade. Look, I don't know if Zynga will continue at such pace, but the numbers do look very impressive. Many Zynga games are repeatedly breaking into top 5 US grossing game charts on both Android and iOS, and many more other games that are doing extremely well. But what I like the most about Zynga is that they have positioned themselves to be a mobile gaming platform company. You could counter that everyone is on a mobile nowadays. Well, that's not entirely true, because the majority of games today are still played on different gaming consoles, such as Sony PlayStation, Microsoft Xbox, or Nintendo. So with mobile market set to grow in years to come, Zynga has positioned themselves to be a very strong player in the gaming mobile space. Don't forget, guys, that 5G is coming, so that could be a really strong growth driver for Zynga's revenue and bottom line, because 5G will lead to improved performance of many of Zynga's games, such as CSR Racing and others. It will lead to improvement in graphics, speed, and times of download, which will engage more users to play those games. On top of that, Zynga ended the year with $1.54 billion in cash and cash alternatives on their balance sheet, which they can use to fund acquisitions of other game development companies, and they have untapped $175 million in share buyback plan. So bottom line is, I see some serious potential in Zynga, and with stock trading at around $7 as of this video recording, I think there is a good potential to see this stock in double digits in the next 12 to 18 months, which implies a potential upside of about 40 to 70%. Before I show you the third company, I want to keep suspense a little bit and show you first the chart of SPY. This is the ETF that mimics S&P 500 performance. This is basically the 4-year performance of S&P 500. And as you can see, it doubled during that period of time. Now, right next to it, let me show you the chart of the mysterious company I want to talk to you about. As you can see, this company's 4-year chart is almost identical to SPY 4-year chart. The only difference is this stock has actually more than doubled in the last 4 years. Notice, guys, that these charts are readjusted for dividends. So basically, these charts show the true returns for both of these symbols, including paying out dividends. Okay, let me reveal the company name. MFA Financial, symbol MFA. MFA Financial operates as a real estate investment trust, or REIT. The company invests in residential mortgage loans, mortgage-backed securities, and assets. In order to qualify as a REIT, it distributes at least 90% of its taxable income to its shareholder. So in other words, whatever they earn as a shareholder, you get 90%, which is standard for REITs. MFA Financial pays shareholders 10.3% interest or yield on its shares. Let me tell you guys, even for the REIT, this is very high. You could tell me, yeah, but how reliable is that dividend? And what about the 2008 crisis? when all these mortgage-backed securities companies got crushed? My response is, MFA Financial is one of the few companies in the mortgage-backed securities business that successfully survived that crisis because they invest in high-quality residential loans rather than high-return by high-risk secondary loans. It has been consistently paying this kind of high-yield dividend since 2008. A lot of mortgage-backed securities, or REITs, rely on accurately predicting interest rate moves. Not MFA Financial, they have intentionally made their investment strategy not to be dependent on accurately predicting interest rate moves. And that makes them low volatility, high dividend, very reliable stock to hold for years to come. Remember guys, more cool and exciting videos that can help you to be better off financially are coming to this channel. So please subscribe to my channel. If you like this video, give me a thumbs up and write me some comments. I'd love to hear from you. Arrivederci.